Good morning. It's Cynthia Fick with Financial Life Planners, and Jean and I plan on doing a recorded video for our stock market updates. We're probably going to try to do these weekly, just so you can keep abreast and figure out what we're, thinking about what's going on in the stock market. And what we're thinking lately is, like we've been telling you for the last 3 months, buckle up. It's going to get really exciting out there, and boy, has it. So far, nothing has changed with our original thoughts on what's going on in the market. We had started a new bull market in March of 2020. And since then, the market has basically just gone straight up. So when we entered into 2022, it wasn't if we're going to have a pullback, it's when we're going to have a pullback. Because as you know, every year and a half, the stock market will have a 10, 15, and this time 19% correction. And that's normal and that's healthy. It helps the stock market gather strength so they can be prepared for the next leg up in this bull market. So what's really important to us is that at that 20% level on the downside, we hold, because if we go over 20, that's when the market is considered to go into a bear market, and it could become a little worse. Historically, this is just kind of an interesting little fact here, is that the stock market, the first correction we have in a new bull market, okay, a normal, healthy 15 to 20% correction. The first time it happens in a new bull market, it has historically never turned into a bear. So I'm saying it's never happened before in the history of our stock market. That does not mean it won't happen. It just means that it's highly unlikely. Okay, so our thoughts are we're going to continue in this kind of sideways, maybe even a little down trading cycle for probably into the summer, beginning of the fourth quarter. And market is just, processing all this. We've got COVID and negative consumer and investor sentiment. We've got raising inflation, raising interest rates, the war, all these things are just like a heavy negative weighted blanket on top of the stock market, and it does not like it. It's the market's drugs of the low interest rates and pumping money into our money supply are being taken away, and the market doesn't like it. The market's afraid that it's going to send us into recession, but so far there have not been any signs of that. There's also been signs that inflation is starting to wane, or at least maybe has peaked. Okay, so that usually lags about 6 months from when they start trying these things to slow down and inflation. Okay, so again, trade sideways during the summer into the fourth quarter, potentially that's when we break out and up into the next leg of our bull market. It's a long-term bull market. So far, nothing has happened that makes us think that's going to be anything different. We again will get more defensive, and that means potentially raise cash if the market doesn't hold at this level. It's kind of gone down to it many times over the last few weeks, been really exciting, but it has not broken through it. It has not closed below the 20% mark. So that's what we're watching for, and we'll keep you up to date and let you know what else we're thinking. Hope you have a great week, and please feel free to reach out if you have any other questions. Take care. Bye.